Chapter number 9. After studying this chapter, we will know about new fund offer process, that is NFO, NFO price and ongoing price of subscription of mutual fund schemes, investment plans and options, allotment of mutual fund units to investors, content and periodicity of statement of account, mutual fund investor, application form of mutual funds, financial transactions in mutual funds through online and physical mechanism, cutoff timing and time stamping, KYC requirements for mutual fund investors, different types of systematic transactions, operational aspect of systematic transactions, process of non-financial transactions in mutual funds, change in status of special investor categories, investor transactions, that is turnaround times. Mutual fund is an investment vehicle for a large number of investors. We will look at various investor services involved at various stages in the life of a mutual fund investment. Number 1. The NFO process. New fund offer. Units in mutual fund scheme are offered to investors for the first time through a new fund offer, NFO. The asset management company AMC decides on a scheme to take to the market. This is decided on the basis of inputs from the Chief Investment Officer CIO on investment objectives that would benefit investors and inputs from the Chief Marketing Officer CMO on the interest in market for the investment objectives. An AMC can have one fund or scheme in a category. There are defined funds within broad equity, capped and hybrid categories. Hence, the NFO has to be in the category where AMC does not already have a fund or scheme. Or it has to be in category where an AMC can have multiple funds or schemes, examples sector, theme, index or fund of funds. AMC prepares the scheme information documents, that is SID, for the NFO. This needs to be approved by the trustees and the board of directors of the AMC. These documents are then filed with SEBI. The observations that SEBI makes on the SID need to be incorporated. After approval by the trustees, the same can be issued in the market. The AMC decides on a suitable timetable for the issue, keeping in mind the market situation. The AMC launches its advertising and public relations campaigns to make investors aware of the NFO. This needs to comply with SEBI's advertising code. The AMC holds events for intermediaries and press to make them familiar with the scheme, its unique features, benefits for the investors, etc. The scheme documents and application forms are distributed to market intermediaries and circulated in the market so that investor can apply in the NFO. 3 dates are relevant for the NFO of an open-ended scheme. NFO open date. This is the date from which the investor can invest in the NFO. NFO close date. This is the date up to which investors can invest in the NFO. Scheme opening date. This is the date from which the investor can offer the units for repurchase to the scheme at the repurchase price or buy new units of the scheme at the sale price. The AMC announces sale and repurchase prices for the scheme reopening date. Close-ended schemes have an NFO open date and NFO close date, but they have no scheme reopening date because the scheme does not sell or repurchase units. Investors will need to buy or sell units from the stock exchange where the scheme is listed. Under SEBI's guidelines, all NFOs can remain open for subscription for a minimum period of 3 working days, and the NFOs other than ELSS can remain open for subscription for a maximum of 15 days. Allotment of units or refund of money, as the case may be, should be done within 5 business days of closure of the scheme. Further, open-ended schemes have to reopen for sale or repurchase within 5 business days of the allotment. NFO offer price or an ongoing offer price for subscription. NFO price is the price per unit that the investors have to pay to invest during the NFO. Ongoing price for purchase, redemption, or that is called sale, or switch outs to other schemes or plans of the mutual fund by the investor is the price at which the investor purchases or receives redemptions or switch outs. Now let us discuss about the investment plans and services. Direct plan, regular plan, dividend payout option, dividend reinvestment option, and growth option. These are the different investment plans and services provided by the AMCs. In direct plan, an investor can invest in mutual funds directly from the AMC through website, and here the expense ratio is very low. Regular plan. An investor makes investment through intermediary involved, that is distributor or broker or advisor. Here the expense ratio is high. Dividend payout option. The investor receives dividend in his bank account. The NAV goes down to reflect the impact of the dividend paid. The reduced NAV after a dividend payout is called the ex-dividend NAV. After a dividend is announced and until it is paid out, it is referred to as cum dividend NAV. Dividend reinvestment option. Now this is one more option where if you don't want the dividend to be received in your bank account, then you can go with this option. However, the investor does not receive the dividend in his bank account. The amount is reinvested in the same scheme and additional units are allotted to the investor. And the third option is the growth option. In a growth option, dividend is not declared. The NAV would therefore capture the full value of the portfolio gains. Next, income distribution cum capital withdrawal, dividend payout, income distribution cum capital withdrawal, dividend reinvestment, and third is the growth options. Let us discuss these all three different types of plans. Most mutual fund schemes offer two options: income distribution cum capital withdrawal or growth plan. A third option which is possible is the reinvestment of income distribution cum capital withdrawal option. Now let us understand income distribution cum capital withdrawal. In a payout of income distribution cum capital withdrawal plan, the fund declares a dividend from time to time. Some schemes like liquid and debt funds with very short term maturity even declare a dividend daily subject to the availability of profits. When a dividend is paid, the NAV of the units falls to that extent. The reduced NAV after the payout of the income distribution cum capital withdrawal is called ex-dividend NAV. After the dividend is announced and until it is paid out, it is referred to as cum dividend NAV. Investors receives the dividend in his bank account. Does not change the number of units held by the investor. The dividend received in the hands of the investor will be taxed in the hands of the investor. Now if the investor selects the growth option, then what is the criteria that follows? In a growth option, dividend is not declared. Therefore, nothing is received in the bank account. There is nothing to reinvest. The NAV would therefore capture the full value of the portfolio gains. There will be no accretion to the number of units held. The NAV of those units will, however, be higher to reflect the gain in the portfolio. If the investor selects the reinvestment of income distribution cum capital withdrawal plan, then in that case, the NAV declines to the extent of dividend. The resulting NAV is called the ex-dividend NAV. However, the investor does not receive the dividend in his bank account. The amount is reinvested in the same scheme and additional units are allotted to the investor. The reinvestment happens at the dividend NAV. Thus, if the dividend is rupees 2 per unit on unit holders 100 units, the dividend would be amount to rupees 200. Assuming the ex dividend NAV of the scheme is rupees 20, then 200 divided by 20, that is 10 units, will be added to the unit holders portfolio. It is shown in the tabular form what is the difference between three options which you select for the mutual fund plans. Investor investment options for different investors is also explained with the illustration depicted. Next, allotment of the units to the investor. Units are offered in new fund offer, ongoing offer, right issue, and bonus issue. In case of new fund offer, scheme units in the NFO are sold at the face value of rupees 10. So total investment amount divided by rupees 10 would give the number of units to the investor has bought or allotted. If the ongoing offer is there, then the scheme units are sold at the NAV. The total investment amount divided by the NAV, that is sale price or market price, would give the number of units the investor has bought. In case of right issue, the price at which the units are offered is clear at the time of investment. The investment amount divided by the rights price gives the number of units that the investor has bought. In case of bonus issue, in the bonus issue, the investor does not pay anything. The fund allots new units for free. Thus, in a 1:3 bonus issue, the investor is allotted one new unit free for every 3 units already held by the investor. If application is rejected, full amount will be refunded within 5 business days from the date of closure of NFO. If refunded later than 5 business days, interest at the rate of 15% per annum for delay period will be paid and charged to the AMC. Once the investor starts the investment in the mutual fund, then various account statements has to be provided to the various investors. Account statements for investments. There will be monthly account statement. Mutual funds issue the statement of account every month if there is a transaction during the month. Annual account statement. The mutual fund provides the account statement to the unit holders who have not transacted during the last 6 months prior to the date of generation of the account statements. Consolidated account statement. A consolidated account statement cash for every month is sent by email on or before 10th of succeeding month, provided there has been a financial transaction in the folio in the previous month. Unit holders are identified by their permanent account number, that is PAN. Next, mutual fund investors. Eligibility to invest. Individual investors. Resident Indian adult individuals above the age of 18, they can invest either single or jointly, not exceeding 3 names. Minors, that is person below the age of 18, since they are not legally eligible to enter into the contract, they need to invest through their guardians. Hindu undivided families, HUFs, your family members pool the family money inherited for investments. The head of the family, called Karta, invests on the behalf of the family. Against his name in the application, he would add two letters HUF to show that the investment belongs to the family. Now, what is the eligibility to invest for the non-individual investors? Companies, corporate bodies registered in India, registered society and cooperative societies, trustees of religious and charitable trust, trustees of private trust, partners of partnership firms, association of persons or body of individuals, whether incorporated or not, banks, including cooperative banks and regional rural banks, and financial institutes and investment institutions, other mutual funds registered with SEBI, foreign portfolio investors registered with SEBI, international multilateral agencies approved by the Government of India, Army, Navy, Air Force, paramilitary units, and other eligible institutions, scientific and industrial research organizations, universities and educational institutions, foreign portfolio investors who meet KYC requirements to invest in equity and debt schemes of mutual funds can invest through two routes: direct route, holding mutual fund units in demat account through SEBI registered depository participant, that is DP, and indirect route, that is holding mutual fund units via unit confirmation receipt, that is UCR. Next, filling the application form for mutual funds. The information required to be provided in the application form is discussed below. 1. Direct plan and regular plan. Direct plan. In this case, the investor must mention direct in the space provided in application form for entering the MFI registration number ARN. If their investment, purchase or subscription is routed through a distributor or an advisor, regular plan, then the ARN or RIA number and other details have to be provided in space provided for the same. Second, unit holder information. A mutual fund investment can have up to 3 holders. The folio is created in the name of the first holder, who is the primary investor. The information to be provided includes the names, nationality, identity proof, and KYC compliance, signatures of all the holders, address, and communication details of the first holder. In case of FPI, NRI, PIO investors, an overseas address must also be provided. Third, minor as a unit holder. An investment made for a minor less than 18 years is done through a guardian who complies with the KYC and the PAN requirements. The date of the birth of the minor has to be provided in the application form, and the proof of age of minor investor has to be given along with the application. An investment for a minor cannot have joint holders. On attaining maturity, the information of the erstwhile minor investor has to replace that of the guardian. KYC, PAN, signature attested by the banker, and bank account details are updated in the folio. Next, POA as a unit holder. Similarly, a folio operated under a power of attorney, that is POA, requires the POA holder and issuer to comply with the KYC and the PAN requirements, and a certified copy of the POA to be submitted to the mutual fund before the holder can operate the folio. Status of holder and mode of holding. Other information that has been provided includes the status of the first holder as an individual or non-individual, and mode of holding and operating the account as single or joint or either or survivor. A joint holder cannot be deleted or a new one added, except in the event of death can a name be deleted. KYC details. The KYC acknowledgement letter as proof of compliance with the KYC norms by each holder has to accompany the application form. Also, additional KYC details are mandatorily collected in the application form relating to occupation, gross annual income or net worth, and politically exposed persons status for both individual and non-individual applicants. 7th, FATCA and CRS details. For applicant including guardians whose country of birth or citizenship or nationality or tax residency is other than India, the application requires additional information under Foreign Account Tax Compliance Act, that is FATCA, and Common Reporting Standards, that is CRS. The information that is required is place or birth of city, country of birth, country of citizenship or nationality, Is the investor's tax residency or country of birth or citizenship or nationality other than India? Yes or no? If yes, indicate all countries in which the investor is resident for tax purpose and the associated tax ID number. Details of country of tax residency and taxpayer reference ID. 8th, bank account details. It is mandatory for investors to provide the bank details of the sole or first holder of the folio in the application form. This includes the name of the bank where the account is held, the branch and the city, the account number, type of account, currents or savings, NRO, NRE, FCNR, and others, MICR code, IFSC details. For minors, payment for investment should be made by means of a check, demand draft, or any other mode shall be accepted from the bank account of the minor or from the joint account of the minor with the guardian only. 9th, investment details. Investors have to make their choice of scheme, plan, option, and payout option at the time of making the application. 10th, payment details. The payment has to be made out of the account specified the mutual fund in the application form. Application number or folio number should be mentioned on the reverse of the payment instrument. The bank through which the payment is made need not be the same as the bank account details provided in the application form to receive dividend and redemption proceeds. 11th, unit holding option. Investors have the option to hold the units in physical mode or demat mode. If an investor opts to hold the units in dematerialized form in an existing demat account, then the applicant's detail provided in the application form has to be same as that appearing in the demat account with the depository participant. 12th, nomination. The applicant can make a nomination in favor of maximum of 3 nominees and indicate the percentage of each nominee. 13th, minimum investment. The scheme information document SID and the key information memorandum KIM provides the information on the minimum application amount. The application has to be signed by all the holders irrespective of the mode of holding. After filling the form, the financial transactions with mutual funds. 1. Initial purchase of mutual fund units. Fresh purchase or initial purchase of mutual fund units in a scheme. Second, additional purchases. Once an investor has a folio with a mutual fund, subsequent investments with the same mutual fund do not call for the full application form and documentation. Repurchase of unit. If the investor has specified the number of repurchase units, then those many units will be reduced from his folio. Payment would be made equivalent to the number of units repurchased multiplied by the repurchase price. Unit will be redeemed on the first in first out FIFO basis. Repurchase means selling of the units. If while effecting the repurchase, the investment holding in the folio goes below the minimum limit for maintaining the folio set by the mutual fund for the scheme, then all the units may be repurchased and the investment folio of the investor may be closed. The redemption request can be made physically by submitting the duly filled transaction slip at any of the investor service centers, branch offices of the mutual fund. Units held in dematerialized form have to be redeemed through the depository participant DP. 4th, switch. A switch is redemption from one scheme and purchase into another combined into one transaction. Next, payment mechanism for mutual fund purchases. Payments for mutual fund purchases need to be made through the banking channel modes that have been approved by the regulators. Online transactions, internet banking, The National Electronic Fund Transfer (NEFT) facility allows the digital transfer of funds between banks. The Immediate Payment Service (IMPS) is an instant interbank electronic fund transfer available to registered users of banks through mobile phones, net banking, and ATMs. Real-time gross settlement (RTGS) or National Electronic Fund Transfer (NEFT) facilities for transfer within India, or SWIFT transfer for transfers from abroad. Next is M-banking, that is mobile banking is another convenient way for investment and transaction purpose. Stock exchange platform and MFU platform are also used for purchase transactions. Unified Payment Interface. The Unified Payment Interface UPI allows fund transfer between accounts through the mobile app. There are many UPI apps available such as Beam, banking application, Aadhaar app, etc., which one can download on their phone. Application supported by blocked amount. Application supported by block amount (SBA) is a facility where the investment application in new fund offer NFO is accompanied by the authorization to the bank to block the amount of the application money in the investor's bank account. Aadhaar Enabled Payment Service. Aadhaar Enabled Payment Service (AEPS) allows bank to bank transaction using the Aadhaar number of the customer. The AEPS uses the fingerprint of the individual as the password to authorize transaction, is thus a secure mode of transfer of funds. National Unified USSD Platform. National Unified USSD Platform NUUP based mobile banking allows transactions even without a smartphone and internet. Next, cards. Cards are the most commonly used mode of digital payments. Mutual fund purchase using credit cards are not allowed. E-wallets. E-wallets are a virtual or digital version of physical wallet. E-wallet for an investor is restricted to Rs 50,000 per investor per financial year. Digital payments such as net banking, debit cards, UPI are amongst the accepted modes of payment of mutual fund schemes currently. One-time mandate, that is OTM. One-time mandate is a payment facility that investors can use to authorize their bank to process debits to the specified bank account raised by a specified mutual fund for the purpose of units. Other payment mechanisms for mutual fund purposes are check or demand draft and cash payments. Mutual funds usually do not accept cash. Small investors who may not be taxpayer and may not have PAN bank account, such as farmers, small traders, businessmen, workers, are allowed cash transaction for the purchase of units in mutual fund to the extent of Rs 50,000 per investor per mutual fund per financial year. The investor has various options for receiving the money due to him from the scheme on repurchase of units. Check. If the proceeds are paid by the check, the same amount will be sent to the unit holder's address. Electronic modes. The electronic modes allowed for repurchase proceeds to be transferred electronically to the investor's bank account. The redemption proceeds will be paid in favor of sole or first holder of the folio. For units held in dematerialized form, the redemption proceeds will be paid into banks' accounts registered with the DP. It may be noted that for non-resident investors, payment is made by the AMC in rupees. In case of NRI investments, if the payment for the investment was made through an NRO account, then the registered account should also be of the same type. If the payment was routed through an NRE account, then the registered account can be an NRO or NRE account.